Hey guys, good morning, everybody. Today is Friday, October 17th. Happy Friday, everyone. 6:25 right now. We got market opening up in about 5 minutes. So I had a little bit of some connection issues this morning. I don't know what's going on. It might be my internet. I don't know if it's YouTube or whatever it may be, but or something, but the connection issue is resolved. So that's good. But anyways, I didn't take any entries for today yet so far. Looks like a couple of people did take some entries. I was looking at the Discord. Um, I don't know what happened, but well, Jonathan over here took the 6 a.m. entry and he won. And then some people mentioned that it like triggered just exactly at stop loss. I think it did trigger exactly stop loss. I'm not sure exactly what happened, but I'll try to take a look at it. But we do have market opening up shortly in a few moments. So with that being said, I will go ahead and put up my trades over here on our list. I didn't take the 6 a.m. entry, so I don't know exactly what happened with that, but we'll I mean looking at the market right now, it looks pretty choppy. It looks kind of similar to what happened yesterday. And a lot over here, it looks like you're right. Like it literally went straight to stop and then it came right to where it was supposed to go. Um it seems like this is just like the type of market that's happening right now, or the most recent market conditions, because that's what happened yesterday, right? It like literally came to our stop, then it came right to target. So let's see at 6 o'clock over here. I mean, looking at that 6 o'clock candle, so I think what we might have to do is we might have to look at price. Like, even though I'm trying not to look at price action, I'm trying to just go off the data. If you see a weird candle like this is a very unusual candle, right? Very spiky candle. It looks like the candle is like way up here, and at the very last second, it pulled down. I'm not sure if you saw this live a lot when I was running, but it looks like this is a very irregular candle, right? Like this candle was probably up here, and then at the very last second, it just spiked down. And then it pushed down a little bit before it pushed up. So with that being the case, looking at this right here, so this would have been the entry. Entry would have been 40.20. And yeah, you're right, a lot. It went literally straight to, well, it triggered stop loss just barely, and then it shot right back up. So, I mean, looking at this here, what we might have to do, and this is what we've been talking about. Um, from the beginning, the only thing that really changes would maybe be the TP stop loss because it looks like the 20-point stop loss might be a little too tight. The thing is, the ATR is already at 20 right now. It shouldn't be at 20 right now, right? We're pre-market. So usually at pre-market, the ATR is really low. It's like at 8, 10, somewhere around there. But right here, it's currently at 20. So if that's the case and the ATR stays very high, we might have to adjust it to maybe like 50, 25 because that would have worked perfectly fine, right? But we'll have to like we're not going to make any drastic changes right now. I'm gonna leave it as is. If anything, I might even run the test uh at with like a 50-25, including on top of the 40-20. Yeah, a lot said I didn't take the 6 o'clock because of the weird long wick. Okay, perfect. So you did the exact thing that I would have done a lot. That wick right there, like I mentioned, it's a very unusual wick, right? Doesn't usually happen like that, especially pre-market, unless there's news. So looking at the news for today, there's actually no news. This has been a problem for us for the past, couple weeks now because of the government shutdown. I talked to Sam about this at the gym. It's weird because there's no news, plus there's the tariff stuff going on behind the scenes, plus there's the war in Israel and the ceasefire and stuff like that with, both Israel and Gaza both blaming each other for violating it. There's just so many things happening behind the scenes that little things like that can affect the market pretty heavily, right? So my next trade is going to be here at 6:35. There's no breaking news here for CNBC. Market is now open, guys, or it's about to open. We're having this big rush of volatility here. The breakout on open is going to be a sell for anybody who's looking to take it. Again, if you guys want to take that, you take it at your own risk, of course. The trade is currently running, but like I said, very choppy markets here on open. So I probably would stay away for a little bit, and just wait for the market here to kind of stabilize a little bit. Because again, look, the ATR is very high, and we're getting like huge spikes back and forth. So it looks like it would have been a buy if you took it with a 10-minute momentum signal. The momentum over here on the 10-minute was, and it's loading up right now as we speak. Let me refresh this. It's just kind of laggy. But yeah, I don't know. I don't think Solange really likes taking this trade anymore. But the entry here was a buy actually, because we had a buy signal right here before market open. So it was a buy right here, and then price ended up pushing, right up. I think the stats over here even called for it. Yeah, it did. So right here you can see there's a long entry on the open. Strategy tester. Yeah, exactly. So it was against momentum right here, buy position, and it went straight up to the 80 points. So the momentum breakout over here on open, if you went against momentum, it would have hit right there. But like Talanji said, yeah, Talanji just mentioned, nope, not taking the breakout, hopefully ever again. The open breakout, yeah. You're better off taking like the algo breakout, right? The ones that have better probabilities. I mean, the open breakout, yeah, it's gonna win here and there, but you don't really have control over like how it's really gonna move. So for me personally, I wouldn't really take the open breakout. That's why I stopped using it. I'm mainly gonna look for the breakout, based on the algo data. So my next entry here is gonna be at 635. I'm gonna be looking for a trade with momentum. It has a 68.42% probability of it winning. I'm gonna try to make space here so you can kind of see these a little better. Again, the thing here that I'm most concerned about, guys, is the market structure, right? Because we don't really we don't care about price action or technical analysis, but we don't want price to be choppy, right? That was a problem that was happening yesterday. Price was too choppy, and it was kind of screwing with our positions here because our positions are based off momentum. So if price isn't really moving, to the upside or to the downside, it becomes a problem because we need price to be moving, right? Our trades are based off momentum, so we need price to actually be moving. So with that being the case over here, looking over here at this current momentum signal, it's a pending buy signal, right? So I think what I'm going to be doing here is I'm going to be waiting for like at least some sort of confirmation for price to actually be moving out of this chop because we don't want to trade in the chop, right? This is why we lost trades yesterday because price was stuck in the chop. I know we're trying to go off the quantitative data, but the problem is like this data is not based off choppy markets. It's based off moving markets. Market just started becoming choppy yesterday. So, if it's choppy yesterday, choppy today, it's probably going to cause some issues with our positions. So if you want to take this position with me, I'm going to be looking for an entry here at 635. It's going to be coming up in about 2 minutes. It's going to be with momentum. It has a 68.42 probability of it winning. So it does have probability of it losing, but it leans for this direction with momentum. It's a 1 to 2 risk reward. It's one of my target entries. It wins 73.43% of the buys that have came up, and it's won 3 out of the 3 recent Fridays. So if you want to take this trade here, I'm going to be looking for a possible buy. Looking over here at the trade analysis, you can see over here that it's won 8 out of the 12 buy positions. Wait a minute. Is data right? Hmm. For some reason, this data here is different. 642 trade analysis over here. It's actually higher for a sell. Okay, sorry guys, I gotta change this over here. This is actually not correct. So I'm actually looking for a possible sell here, not a buy. I mean, the buys are still good, so don't get me wrong. I mean, the buys here are still good, but the sells here look more ideal. Let me just pull this up a little more. Okay, so I mean, they both look fine. So it has a 66.67% probability of it winning for a buy, and it has a 71.43% probability of it winning for a sell. So initially, I was looking for. See, this is what I'm talking about. Look at my connection. I'm having connection issues right now with TradingView. Okay, there we go. I'm back. Um, yeah, I don't know what's going on with my internet or if it just might be the system, but I keep having connection issues. But anyways, if you guys want to take this entry right here, it's going to be a buy. Um, the buys aren't bad. So the probabilities here, they kind of go down a little bit, just a little bit, because if you want to take the buy here, it's going to be at 66.67. I'm going to wait. This just doesn't line up with what I was looking for. But Talanji said here it does align with the with the orb. So if you guys are looking to take the orb here, or the orb is currently running right now, the buy entry is going to continue pushing up with the orb. So I'm not in this position right here. Looking at the candle here though, this is the same thing that we just talked about with the 6 o'clock entry. So a question from Smith over here. He's asking, you may have already said something before I joined. Would you have personally taken 6 o'clock? So unfortunately not, or I mean, fortunately not. I wouldn't have taken this because of the unusual candle at 6 o'clock, right? So that 6 o'clock candle, see how this candle here has this huge, huge wick on top? I didn't see this candle open live, but what I see here is the candle was actually pretty high, above here. And it looks like at the last second it came down very low. So it was like a full green candle. And then all of a sudden it dropped down to like, this little hammer, basically, upside down hammer. So, as much as I don't want to use price action is kind of necessary in this specific type of market. And the reason why I say that is because market's choppy, right? And we've been getting caught up in this chop since yesterday. Kind of similar to the position right here again, right? So this position right here for a long, like I said, I'm being a little more careful because the ATR here is extremely high. I'm trying to stay away from price action and technical analysis and just going off the quantitative data here. But the problem is that this is not the normal market, right? All of this data is pulled off a normal market where market's actually moving pretty smoothly, right? Moving smoothly to the upside, moving smoothly to the downside. The only problem here is that if you're taking trades like this, it's easy to get chopped out of the position, right? Because you can't really see it here very well. I mean, you can see it, but some people aren't able to see that we're in a chop right now. Like people might see this as a push to the upside, but realistically, if I was to draw some structure here, you could you would be able to tell that we're in a choppy market. And the problem with us being in a choppy market is that momentum is not good in a choppy market, right? We want price to be directional. So looking at this right here, see how this got chopped out? It's exactly what happened at the 6 o'clock entry. See, this thing right here, if you were to take this trade, you probably would have gotten stopped out. But because, if you had a wider TP stop loss to survive the chop, you probably would have, the trade would have hit for you. It looks like this right here, if you would have taken this for a buy, you would have been spiked out and then it would have went straight to your profit target immediately right after. So the thing with this market is that this isn't normal. Market wasn't like this for the past October, right? If you look at our stats for like pretty much the entire month, we were doing amazing from like 29th until basically yesterday, because the market wasn't super choppy. Today or yesterday it was super choppy. It was like more of it was a losing day, and then today it's super choppy again. So I think what we have to do is we have to follow price action and technical analysis to some extent to understand when to sit out of the market. Because the thing here is if you take all the trades, you're probably going to end up in profit, right? If you take every single trade here that comes up, you may end up in profit. What happened yesterday was like, it was such horrible luck because I took three trades and those three trades lost, but every other trade won, right? So like it kind of puts you in that limbo where it's like, okay, do I take every single trade that comes up or do I just keep sticking to the ones that have the highest probability? The problem here is that we don't know when the market's going to go into chop, right? Because now it's back into chop. You can see here it pushed up for like maybe a few minutes and then now it's back in this chop. And the problem is you don't want to trade in this chop. You also don't want to trade when the volatility is too high because you can see over here the ATR is currently at 43 and our stop loss is 20 points. So you think about it, and if your stop loss is 20 points, any type of pullback or drawdown is going to stop you out, right? Because if the ATR is 44, that means that the average candle size is this big. So say, for example, you enter a position, it's likely to stop you out before it goes straight to your target because the candles are so big, right? Does that make sense to you guys? So this is why I mean, like this data here is good, but it's not good in this specific type of market because it's going back and forth. And if your stop loss is so tight, you're not going to be able to survive that, right? If anything, you might have to have a wider TP stop loss. Like for example, here, if you were to take this trade, you'd have to have like maybe like a like even like a 50 or a 40/80, something like that to survive like this chop right here. So a couple of things that I'm going to be looking at is I'm going to be looking for the ATR here to kind of slow down a little bit. So like right now specifically, I'm probably not going to take any entries because the ATR is too tight, it's too wide. and my stop loss is too tight. If anything, I would have to make some adjustments based off the ATR. So what I might do here is I will look at the entries. So the next entry is going to be over here at well, there was another one right here at 636. I think this one over here actually would have won probably. So these are like little things that I can do here that can kind of make small adjustments to like what's happening. So for example, the 636 entry came up right here. I'm just adjusting the stats. Um, I don't know if this one would have hit or this one I couldn't tell if it would have hit or hit stop loss first. But what I can do is I can kind of play around with the settings. So if I want to go for a wider TP stop loss, for example, here it shows that it has like a, let me update the report. We'll go to a next one. Or I guess there was another one right here at 638. It looks like all of these are kind of tricky in a sense. But here's what we can do. So for example, it shows the probability of it at a 40/20. If anything, we can adjust it to like 80/40 and see how it plays out. Like if the stats are better, right? Because if the stats are better, or if it improves, then you could probably just use that instead. But again, I think this is better to sit out of the market than to kind of figure out, what TP stop loss should it be adjusted to. Because right now, yeah, and you can see here it's not very good, right? It goes down to 42%. So this is all basing off the historical data. This shows that like historically, like for the past month, a wider TP stop loss is actually not better. It's better to keep it tighter. It's just these most recent 2 days is it's hard to gauge because we want the ATR to stay smaller. Typically in a normal market, we've been following, the ATR. The ATR is typically around like the lower 30s, if not like the mid 20s. But right now it's double. It's like 40 points. You can see over here, like these candles are very, they're not consistent, right? We have this candle over here, these smaller ones. These smaller candles right here are about 34 points. And then all of a sudden you get this huge red candle right here. And this one is 50 points, right? So you think about that. If your stop loss is 20 points, it's going to be almost impossible to survive any of this drawdown. And again, right here, see how the next candle is very small? You get these outlier candles. They kind of come out of nowhere, right? You have small candle, huge, huge candle, small, small, huge, and then some like mini candles right here. So what I'm going to wait for here mainly is I'm going to look for the ATR here to slow down a little bit. Once it drops down to like maybe mid 30s, I'll probably be looking for some entries there. Right now, it's currently 643. So there's another entry that may be coming up at 647. This is going to be with momentum. It doesn't have a very high probability of it winning. It's 57.89 once to its reward. However, it looks like for sells here, it has an 88.89% probability of it winning. It won one out of the 3 recent Fridays. So if you do want to take it, I would aim for a sell. Again, the thing here that I would be more concerned about is the candle sizes. Again, right here, another huge candle, right? Like I said, if you're taking these entries here, these candles are extremely large, 70 to 80 points. The thing is, there's no news and there's nothing happening that's a catalyst for this, right? There's no news today. Um, see, there's just a couple things happening behind the scenes. So right here it says Dow ticks higher as traders try to shake off bank credit concerns. So it looks like there's bank credit concerns. Like everybody's kind of anticipating a market crash, right? Because there's a lot of like I don't know if you guys have been following the fundamentals. You guys probably haven't, but there's like there's a bubble right now with regard to bank credit, especially with car loans, right? A bunch of people have all these car loans, and they're anticipating people to um to default on their car loans. There's like a whole car I forget which company, but there's a whole car loan company which they're predicting is gonna basically go belly up. Um, So there's just a lot of different things happening behind the scenes, but I mean, realistically, there's no actual news events, right? There's nothing here planned to be released for the day. And it's very unusual that we're having these huge, huge, big spikes, right? The ATR is staying at 40, but the government shut down. Plus, there's no actual news events that are scheduled. Like if there was a big news event today, this would make sense for us to have these big moves and this high volatility. But today's just a random Friday. It's a Friday with no it's a Friday with with no catalyst to really push price around. But anyways, if you guys are looking to take this trade right here at 647, I'll mark it up for you guys. I'm probably going to sit out of it because it's just not a super good entry, of course, with regard to the current market conditions. I'm updating the stats over here so we can kind of see where it's at. Yeah, Richard said, I don't like how choppy it is. Would have taken a loss on the 635. I agree 100%. Drew's asking, hey, Sean, how far back does your ATR indicator consider? You can set it to as far as you like. I have it set to, let's see, have it set to the most recent 14 candles. So basically, it shows me what's been happening more recently. But if you want to go super far back, it's probably not going to be useful to you because market was kind of dead over here pre-market, like it normally is. If you want it to be a little more accurate, you can always make it tighter. So it's set to a 14 candle look back, but if you want to just see what's happening like right now, you can half that into like 7. It's not going to change very much, but if you half it to 7, you can see it goes up a little more. It's at 46 actually now. So I think 14 is a good number. This is like the standard for ATR, kind of going back 14 minutes. But if you want to have it even like more accurate, you can go back to like 7, and I'll show you what's happening just right now. Either way, the ATR is super uh accurate with regard to like what's happening right now. David said this is all the result of last week's drop. Yeah, exactly. So like last week's drop, a lot of people are reacting to like to the market change, right? I think a lot of people are kind of gambling with regard to the market change. You can see over here, like let's go back to Friday. I'll go on the higher time frame, like the 10-minute. So this is what happened last Friday. We had this huge drop, right? Price dropped, I think like almost like more than 1,000 points. So let me go over here real quick. I'll just go on the 15. It's easier. Okay, so this is what happened. You still can't see. Let's go on the 30. Okay, so here on the 30-minute, you can see a little better. You can see that we had this huge drop right over here, right? So this is an outlier. This is like considered what some people would call a black swan event, right? This doesn't, it just happens random. Trump sent a message out and said he was going to put 1,000 or a 100% tariff on China. And then this thing dropped like 1,500 points within a day. This doesn't happen. This usually happens like when something crazy in the world happens, like a war breaks out or COVID happens and stuff like that. So this big dump right here happened. Price recovered right back up, right? You can see how price kind of recovered right here. And now that price has recovered, people are now kind of just speculating in the market. So this big drop right here, what it did in a sense is it just created a big range, right? Because market here was kind of moving smoothly, and we had this big drop, and then we had this correction, and then another big drop, and then a correction, and then a big drop from there. So now after this big drop, now people are kind of playing within this middle market, which is not good for our data because our data considers what happened a month ago. And there's people just speculating, pushing price back and forth. So the volatility right now is extremely high in comparison to where it should be. I mean, the ATR is at 47, guys. This is crazy, right? The ATR is almost 50 points. It's 50 points on a regular Friday with no news, government shutdown, and there's just no catalyst in the market pushing price around. This is just a lot of speculation going on right now, right? So just be aware of like, the market conditions. I know we try to stay away from irregular movements and market manipulation. And it's really hard to stay away from it right now because it's just happening back and forth, right? Look at these candles, guys. These candles are all over the place. Huge green candles, right? You have huge red candles here. So this candle over here was about a 72 point candle, 74 point candle, right? That's a big move. And then look at this big push right back up. Another 80-point candle, and then this big candle right here, another 80-point candle. So like I said earlier, guys, my stop loss is extremely tight. It's 20 points. So if I was to get caught up in any of this movement, I could get stopped out very quickly. like within a split second, right? I might get into a position, might push down for just 1 second or a split second, stop me out, and then push right back up. Or vice versa, the other way. If I wanted to take the trade to the downside right here, and I'm just showing you guys this as an example, see how easy it is to get stopped out? You get stopped out really quick and then it comes right back down. So what I'm doing here is instead of getting into these positions, I'm just kind of playing it safe and then I'm sitting back. I'm waiting for the market conditions to kind of slow down a little bit and calm down because it's not getting any calmer. It's getting crazier actually. If you just look at the ATR, basically the ATR should be around 20 right now. During a normal market, it'll be around like mid 20s, maybe low 30s, but this is getting close to the 50s right now. So just keep that in mind, guys, if you guys are looking to take trades here. If you're going to take some trades, I would say you'd have to have a pretty wide TP stop loss, like maybe like a 50 point stop loss in a case like this. Like for example, if you wanted to take the buy right here, you probably would have to do something like a 5100 because it's going to be almost impossible for you to survive the drawdown, right? Like even right here, check this out, guys. If you took an entry right here, if you had a 50-point stop loss, you would barely be able to survive the drawdown. Like barely. It looks like it came down almost close to the stop loss, and then now it's coming right back up, right? So our direction here is correct. The problem here is that can you survive the pullback? I think that's the biggest thing because the market here is just too volatile. Usually I try to base my stop loss off the ATR. So here's the thing, guys. If this becomes normal and the ATR stays very, very high, that's perfectly fine, right? I'm going to change my data. Instead of using a 40/20, then I'll adjust it to like maybe 50/100, right? And we can change the data here right now, actually. Let's change the data and kind of see like what's going on here. You kind of play around with it, kind of figure out what works best, right? So like again, right here, if I change the data a little bit, and I can probably pull up the screener actually, this will probably help. Or I'm gonna pull up the screener and we're gonna see what the probabilities are looking like with the higher TP stop loss right now. It's probably not gonna make a big difference because this type of movement has only started happening more recently since yesterday. But it's not horrible. So I put the screener up right here. I'm using a 100-point TP with the 50-point stop loss. The probabilities aren't super high, but they're like at 57, right? 57.9. 57.9. Again, if you want to check different probabilities, you can always just adjust them a little bit. So like instead of a 50/100, you can do like maybe like you can do like an 80/40 or something like that. And then you kind of just play around with the settings here to identify, okay, what has a higher win rate? Like what's been hitting over this previous month? So I'm changing it back to like 40/80 and I'm updating the report. I'll see if the numbers here are a little bit higher. They don't look, oh, they're a little bit higher. So like they're like 60% now. So you can see here we're trying to find that sweet spot, right? What's the sweet spot where the trades are hitting and they're working very well. So again, that's a sweet spot right there. It's like 60%. Let's go back down to like 40/20 where we were doing earlier. I think 40/20 will still be the best. It's you're gonna have some skewed data from today and yesterday though. So it might not be as accurate as we'd like, but this is a day where we probably want to sit out for a little bit. Just sit out and wait for the ATR here to drop down. So it looks like I'm not able to take any of these 6 o'clock entries, which is perfectly fine. I'll just wait until 7 o'clock for my opportunities here to come in. The next entry is going to be at 7:11. All right, so let me go over here. I'll put the settings over here at 7:11. And this is what kind of sets apart the novice trader from the professional trader, right? It's not about being able to get into entries. It's being able to sit out and wait for your entry to come to you. You got to understand there's like different factors in the market. Again, I'm not really using price action to identify my entries. What I'm using here is because we're trading off momentum, I'm using the volatility here. Again, the ATR here is extremely high. A normal person wouldn't be able to tell the difference between a volatile market and not volatile market if you're not following the ATR, because again, we're doing it based off the statistics here, right? We've been trading YM for pretty much every day for years now, and we know that the normal ATR is not supposed to be this high. Normal ATR is supposed to be closer to the mid 20s, lower 30s. That's why it's important that experience comes into play here because this is what's going to prevent you from getting into what people would consider a crazy market. Like this is a kind of a crazy market. Scrolling back right here, you can kind of see that price is now starting to move up very smooth. So this is great. We want price to move up smoothly like this, right? If this is the case, then we might be able to, catch this ride to the upside. Sorry, guys, let me see this right here. It looks like some of my data here is wrong. I gotta update this again. So this is actually against 69. Okay. So what I'm anticipating right here at 7 o'clock, because it's against, I'm expecting a reversal to happen. So I'm looking for price to push up a little bit. Or so here's the thing. We won't really know until we get closer to 7-Eleven, but we're looking for price to go against momentum. So this is one scenario that we might see happening if price continues to push up. I'm looking for a reversal to happen right here at 7-Eleven, right? Or vice versa. What I'm looking for here is I'm looking for price to maybe push up a little bit, retrace, and then continue up higher from there. It's tricky. It's yeah. So Sam over here said, be careful buying around this area 46, 419. He's identifying I'm assuming a resistance up here. I'll mark up market structure and the technicals in a few. Let's see. KM said, "Hey Sean, brand new to the channel. I come from trading ES and NQ. I believe today is OPEX. Does that affect YM? It should affect YM. Is OPEX happening today? I didn't see it on the calendar. But yes, you are correct. If that's the case, then yes, maybe that's what's causing the volatility, right? Let me check Forex Factory because I didn't see any of it on the calendar for today. I don't know if OPEC was like, canceled or delayed because of the government shutdown, but I don't see anything here on the list for OPEC. I know OPEC typically happens like, during the Fed week or a specific week of the month, but yeah, I don't see anything here about OPEC. I didn't see anything on CNBC there. Usually they report on it if it's happening, but I don't see it. But yes, if it is happening, then then yes, it would affect YM specifically because there are gas stocks and there's related stocks within the Dow index. Visual said he got 100 points on the 2-minute orb. Had to put a wider stop loss, but I'll take it. Yeah, nice work, Visual. So Visual kind of took, what we mentioned uh, to his entry. Yeah, basically. So I'm looking over here for the orb. The orb was a really messy orb right here. I mean, obviously the orb never came back to retest, so there would be no entry. But you'd have to have like an extremely wide TP stop loss to survive any of this here. So nice work, Visual. I don't even know how you survived this move here, bro. Like it looks like this thing pulled back extremely heavy. So it broke out above here. It pulled back about 120 points, and then it pushed up 120 points. Huge chop back and forth right there. Yeah. I'm glad you got the profit on it. So yeah, Visual got 100 points on it, but yeah, like I said, this is extreme chop, right? This is just looking at the order for today, this is a crazy chop right here. I mean, it wouldn't matter because it never pulled back to fill, so you wouldn't take that entry there ourselves, but somehow Visual was able to survive this pullback and and ride this back up. So nice work there. Um, Anyways, okay, back to what we were saying over here. So the next entry is at 7-Eleven. It's going to be against momentum. Check the settings again. Okay, so 7-Eleven against momentum has a 63.16 probability of it winning, whether it's a buy or a sell, that's overall. Looking over here at the trade analysis, it currently has a 69.23 probability of it winning for a sell. So obviously I would probably aim for the sell there. 50% probability of it winning for a buy. Not horrible, but I'd probably go with the sell versus the buy. And then looking over here at the list of trades. So last Friday was October 9th, I believe. Sorry, October 10th. So October 10th over here at 1. The Friday before that was October 3rd, it lost. And the Friday before that was September 26th, also a loss. So it won one out of the 3 Fridays within the past month. Again, looking at price here, guys, if this chop isn't obvious to you guys? It should be obvious now, right? Because look at this chop. Price was chopping pre-market, right? Back and forth. Now price after that was chopping on market open. And then now again, price is in this huge range. So not exactly the best type of market to take directional entries, right? Which is what the strategy is based off. It's based off momentum. So we were looking for price to kind of swing in a specific direction. Obviously, right now it's not swinging in a consistent direction at all. So if you guys want to take this entry over here at 711, I'm gonna keep following it. Ideally, I'd like the ATR here to kind of drop down a little bit. If this is the case, and you know the trade here or the volatility doesn't die down, I still have other entries here. So I might hang around until a little later. Like right now, we have a 711 entry. This is one of my target entries, but the volatility is too high. If this is the case and I'm not able to get into this trade, then I might wait until 751 because I have another target entry down there a little later. And as much as I try to get away from having to look at price action and technical analysis, the problem here is that this is a different type of market, right? I wouldn't consider this a normal market. If you guys looked at the previous days, like if you were to exclude yesterday and today, you'd see market here was actually moving very directional. These previous 2 days are very, very choppy, and it's best to kind of just sit out rather than, take unnecessary risk here, of course. So we'll follow through and we'll kind of see where this ends up taking us. But again, I'm not taking anything here that is overly risky. Let me go over here. I'm going to take a look at the market structure. So I do have a couple levels here that I will draw up. Zoom out from here. All right, so I have a support level, which is right here. Have another support level right here. The good thing is, the good thing is we're able to sit out of this market and we're not taking unnecessary risk, right? I think this is where I come in handy for you guys because with my experience trading YM for years, I know when the market's moving weird. And when it's moving weird, it's better to sit out than to take, obviously the unnecessary risks here chasing these trades. So we got a couple support levels over here. Price established a support, pushed up, went into a choppy market right here, pushed up, and now it's kind of sitting and respecting this support level. We do have a resistance up here. I'll just draw this so we have an idea of like where the resistance is at. And then we have a couple imbalances in between here. I'm not going to mark up the imbalances because it's kind of irrelevant. So we have an imbalance which is right here. But like I said, this thing might just break through it, so I'm not going to leave it there. Once if we have an imbalance that break and retest the area, then I will leave it up. And I think that's what's happening right here. So we have another imbalance right here. It's breaking, retesting the area. If you're looking at the technicals and so looking at the structure right here, this imbalance is either going to be, considered a fair value gap or it's going to be inverse. So depending on what happens here, if price breaks and retest, this will be a normal fair value gap for those of you who like to trade that. And if it breaks above it and retests this way, then it could be an inverse fair value gap. This is why I don't really like technical analysis because you kind of have a 50-50 chance here of like where price is going to go. Sometimes not even a 50-50 because price can still chop and stop you out either way. It doesn't have to break out in either direction. So just taking a quick glance over here at the market structure, that's kind of what we're seeing right now. Price is really in this big range. If I was to delete this imbalance, we're really just in a range right here. But if I leave that imbalance up, you can see that the range is actually getting tighter. So we have a big range, and then we have a little range. If I now just extend this out a little further, it's actually been respecting this area for a while now. So range, bigger range, breakthrough, fake out, back into the lower range. But we'll come back and take a look at this in a few. Again, the next entry is at 711. Looking down at the ATR, it's not getting any lower. It's actually getting higher. It's at 50 points now. So if you guys are not familiar with the ATR, what it signifies is it indicates what the average candle size is. Like I said, my stop loss is 20 points. So any type of pullback, even for a split second, this trade can stop me out. That's why I'm sitting out right now because my stop loss is a little too tight. If I want to widen it out a little bit, so let's see, let's go over here again. So we're currently at a 63.16% probability of it winning, right? Let's go to 150. Because if I have a 50-point stop loss, I can survive any pullback. Let's see what the profitability here is going to look, or probability is going to look like if I use a very, very wide TP stop loss. Not that I'm going to use it, but I'm just kind of curious to see what the numbers look like. So it's not horrible. It's at 47.37. Like I said before, guys, you just need above a 33.3% to be profitable long term. So looking at this right here, it is still profitable, but it's not very high probability. You can see over here the sells hit better. They're about 53.85. So, I mean, if you guys really, really want to take the trade here, this is going to be against momentum. So basically you do opposite. So if a buy signal here comes up, you take it opposite and you try to ride that down for 100 points. It's a big drop, but it's not impossible, right? It's crazy because 100 points is actually really it's a big move, but because the candles here are so large, the 100 points here look normal, right? So let's compare this 100 points to my 20 points or my 40 points. Look at the big difference here. It's extreme, right? So for normal entry, I would take a TP stop loss of this right here. This looks like it's way too tight. If you look at this one over here, this one actually looks normal. But if you look at the actual numbers, this is a 100-point TP and a 50-point stop loss. That's extremely wide for a normal market. But because the ATR is so high, this looks normal. It shouldn't look normal. This thing should be like expanded across the entire screen. But yeah, I mean, that's the market, right? You have to understand when to sit out. You have to understand when to make your moves. Right now, it's just, it doesn't meet my criteria. My stats here are off 40-20 TP stop loss. So because the volatility is so high, it's not exactly going to be the best time for me to take entry. The best entry over here looks like it was at 809 or 609. So at 609, it looks like if used it was against, where was it at? So 609, which was right here. Yeah, so you would have entered right here at 609 to be against momentum. And it looks like this over here it wouldn't even hit either. On it barely hit. So looking at this right here, I'm looking at my statistics. It shows that at 609 or 907, sorry, I was numbers here a little off. Basically or it's right there, 609. Against momentum, the trade would have hit for today. So you can see the algo here is identifying these entries on the higher time frame or the higher TP stop loss. This is using a 100-point TP, 50-point stop loss. The algo is still identifying these entries. It's just we don't use that wide of a TP stop loss. So, if this becomes the case and the ATR stays extremely high for the next, couple weeks or couple months or so, then I'll just adjust my TP stop loss. Right now I'm doing a 50-40 or a 20-40, but I can always adjust it to something wider. It's just such a drastic change for 2 days of chop. So I'm gonna leave it as is for now, and then obviously in the future I can make my adjustments. But yeah, if there's any questions that you guys have, feel free to hop into the chat. Otherwise, it's we're kind of just waiting here. We're just waiting here for the market to stabilize even at least a little bit. Yeah, even at least a little bit to identify your entries here. Oh, Sam, no worries. Yeah, I see your redacted messages. It's all good. I know everyone has like their own ways of applying it. Um, yeah, if it works, it works, right? So yeah, if your different way of identifying it works, then perfect. I'm a little frustrated today. Just a little frustrated because I was hoping we'd have a normal day today. I thought yesterday was like a 1 day type thing with the choppiness, but it's not looking like it, right? It looks like the market here is still chopping like it did yesterday. And the thing is, I learned my lesson yesterday, right? Took losses back to back. We haven't had a day like that in a long time, maybe a whole month. So I understand that in a market like that, it's best to just sit back because like we usually don't lose like that ever. Let's see, a question from Smith. So Smith said, I wonder how an algo that adjusted a TP with ATR would test. Yeah, no, I agree with you too, Smith. So here's a problem with that. It's going to have skewed data if we do that, right? Because it's going to have different TP stop losses. Like, well, I mean, it's not going to have skewed data. It's going to have proper data, but it's going to have so many different, so much different criteria in a sense. Because there's going to be so many entries, right? Like, for example, um, yeah, but basically, if you were to do something like that, it's going to have like my list here would just be extremely large. And the thing is, we don't want to have an extremely large list. We want to have like uh, a concise list, right? Because the thing is, if it based off the ATR, like for example, like right now the ATR is 45, right? And we adjust the algorithm over here to um 90 45, right? The thing is that every entry is going to have it's going to have the profitability is going to be pretty high because it's just going to be adapting to whatever is like active at that time, or it could do the opposite. It could have a negative impact on the setup because what's going to happen is that because it's changing the TP stop loss so often, it's going to find consistency, of course, because the ATR is different, but it's not going to find consistency at of a point in time, right? Because like right now, for example, at 712, if it adjusts because the ATR is at 47, yeah, of course it's going to be pretty good. You know, the probability here went up to like 52, but the ATR might not be that high tomorrow, and it's gonna be hard to find a consistency. Like today, it might be like 47, whatever. But then we can't really predict what's going to happen tomorrow because tomorrow it could be like at 20 ATR. And if we go in with a 40 stop loss, with a wide TP stop loss, that could be detrimental to the trade for the next day. So yeah, I get what you're saying. It would work really well. Um, but it's going to be hard to find a consistency because some days are like, for example, today and yesterday, you're going to find good results when the ATR is like at like 44 or whatever. But then, um, the day before that, the ATR was good at like 20, right? 20 or 30. So I think if you were to do something like that, it would probably confuse you more because there's no fixed data. Because then tomorrow, for example, like if the winning trades are going to be at like 47 or whatever, then it's going to confuse us because tomorrow we're like, okay, do we use a tight TP stop loss or do we use a wide one? Because there was an outlier day that was happening um, today and yesterday. Let's see. Richard said, "What is the 10 short on your screen?" Oh, it's from the data that I have set over here. That's because I was playing around with the data. So this was the 90 45. I wouldn't take that trade, of course, but but that's just what it came up with. The entry that I would have had here this is 7-Eleven right now. This is 7-Eleven entry. It would have been 40 20. Maybe against momentum. This trade actually, I mean, it looks like it would have lost probably. Yeah, it still would have lost either way. And it wasn't a sell, well, it was a sell entry, but this is one again that I mentioned I would have sat out of. And these candles here are very, very, very unpredictable. Let's see, Solange said the 7-Eleven printed on the MPS entry, so we took it and he got it. You took it with momentum, Solange? Looks like if you took it with momentum, it would have worked. Yeah. Let's update the report real quick. I want to see what Solange took here. Yeah, the probabilities here aren't very high, but that's where this would be set at. All right, so like I said, guys, I said if the volatility here didn't change very much, I would have skipped it. And obviously I'm skipping it because the volatility here, again, is just a little too high. Um, there's a couple more entries here that are coming up. This might be a day where I might not even take any trades. I don't know if this is going to drop anytime soon. I've been waiting for it to come down to like at least like maybe mid 30s, lower 30s, but it just stays, it's pretty consistent at like 46.50, which is too high for me. Um, yeah, it's just way too high for me. So next entry is going to be at 721. I'm going to pull up the statistics over here for that. 721. I'll update my report, kind of see where the probabilities are. Again, these probabilities aren't going to they're not going to fare very well with the current market conditions because it's just too volatile. Here's our main chart. So the imbalance over here got broken and became an inverse. Let me see if there's any other market structure here. I don't think there is. And really, there's another support level down here, it looks like. All right. Looks like, okay, so I pulled up the data over here for this is going to be, man, it looks like my stats over here are kind of off, guys. Sorry for you guys. I guess I was like not paying attention with like the direction, but it looks like it should be against. Let me load this up. I mean, it wouldn't really matter. It's not one of my target entries, so I don't think it's one that you should be looking for. But yeah, okay, so this over here is actually against momentum. So looking at the trade here at 721, it is against momentum. It has a probability of 52.63. This isn't a good overall probability, right? I don't like this. Typically, it has to be above 60 for me to for it to even be on the list. 65 is going to be ideal for like me actually looking to take the entry. The reason why this made it on the list is because the win ratio was super high for sells specifically. So you can see over here, the longs actually kind of screwed with the stats a little bit because it pretty much only won 4 out of the 11 trades. So it has a 36% probability of winning for buys. But for sells over here, it has a 75% probability. So for the 721 entry, obviously you'd be looking for sells here. It's not really a good entry. So I personally wouldn't be looking to take it, but I would be using it as a confluence if I was in an earlier entry or if I'm in a later entry, right? And it's not looking like it's going to be a sell here. It looks like it's probably going to be a buy, unless we get a buy signal which comes up prior. This is a good learning day. Honestly, it's a good learning day to know when to sit out of the market. Because I'm not tempted to take any of these trades right now, especially because of the ATR, right? And this isn't something new. I mean, we've done this before. This has happened before where the ATR is just way too high, the market's moving irregular, and we just sit out of the market. I was really hoping we'd be able to take one trade today because if I took one trade today and it won, then it would have recouped my loss from yesterday, right? We're still in profit for the week. It's just not, it hasn't been a great week overall. Um, but yeah, if I had a win today, this would have recouped basically all the losses from yesterday. I took two losses yesterday, but since we're doing a 1 to 2, obviously one to win would have recouped all of that. And that's what I was hoping for and aiming for, but it's just not looking like that's going to be the case today. We'll see. I mean, I'm not done trading yet. We still got a couple. We got some couple opportunities here as we get closer to 751. 751 is it's a pretty long way down. So if that's the case, we might have opportunity down the line over here for the volatility to drop down a bit. We've got it's about 30 minutes or so. 30 minutes for the market to calm down a bit. But here's the thing, even if the market calms down, look at this chop, right? This market chop has been chopping pretty much all day. So we have this big chop, which is right here. And then same thing here. I mean, price is still chopping. So we don't like that because we want price to be moving smoothly. It doesn't, I mean, we could still trade in this chop. The problem with the chop, though, is that the volatility is just too high. You can see it's starting to slow down. It's at 43 ATR now. So what we want to see here is we want to see the ATR drop down and closer to the 30s. We don't want it to go up. We want it to go down. But yeah, if you guys have any questions, feel free to put your questions in the chat. If you guys are new here or if you guys are interested in investing in the hedge fund is now public. If you guys have not been on this live session for the past couple of days, um, so the hedge fund is now active. You can see over here, here's my hedge fund, Kodi Kai Capital LLC. I'm registered with the National Futures Association. I'm now considered a professional trader within the futures market. I'm affiliated with the futures market now. So, I mean, you're probably not going to see any other traders online that are actually, licensed to give trading advice and stuff like that. This isn't something easy to get. So this took me like almost a year to get done. I had to take the financial exam series 3 to get this license. And yeah, now I'm considered uh, like a documented professional trader. So if you guys are interested in investing in a hedge fund, basically the hedge fund, how it works is you would set up an account with NinjaTrader, a personal account. You'd have to have like a minimum of 10,000. You can start with less, but ideally I would recommend to start with at least 10,000 because you want to be able to cover the margin, right? So you want to have that much, and then once you have that account set up, you'll just provide me with your account details, and what we'll do is we'll link your account to my account. So basically, whatever my accounts do, like for example, today's a good reason for you not to trade. A normal person probably would still be trading this type of market, but because I'm experienced in the market, I'm able to kind of sit back and understand that this is not a good market to trade in. You guys have seen my profits over here pretty much for the month. So for the month so far, I'm currently up 317,000. For the week so far, I'm up 14,000, and for the year so far, I'm currently at 933,000. So basically, these would be all client accounts for the fund. If you guys want to be one of these clients here, like one of your accounts are going to be basically part of this fund, you basically get a percentage of these profits, right? So like I said, your account would be linked to mine. Your account would copy exactly what my account does, and you basically would just be taking every single trade that I take. So if that's something that you guys are interested in, feel free to reach out. I need to get, I've been sending out contracts all day yesterday, so it's been a grind. But it's good. It's good and it's fun, and I'm excited to make a lot of you guys here money and profit on a monthly basis. More of a consistent profit, right? So here's the thing that a lot of people do, like they'll have me trade their personal account and then they'll still trade their own account with like Apex or these prop firms. So they have consistent income coming on one side with just my trades, and then they have like their more speculative income coming from trading their own accounts. So it's kind of nice to have like, trades taken that are more on the conservative side, and then you have the riskier trades taken on your own accounts. So yeah, other than that, let's see. T-Bone is asking, man, how did you come up with this strategy? The strategy is really simple. So the way that this is basically the same strategy that we've been applying for years now, right? This thing hasn't changed. This is basically the momentum breakout, but it's identified by the minute. So instead of just taking the entry at 6:30 a.m., we have the algorithm which is running all day. So like basically if you wanted to see like what trades are hitting between 6 o'clock and 10 o'clock or 9 o'clock, we have the algo over here which provides the win rate for these entries. So the thing that I noticed or that I realized over the years is that you're never going to be 100%, right? It's almost impossible to be 100% with your win ratio. But what you can do is you can trade with probabilities on your side. So obviously, every trade that I take, I'm looking for something with at least above a 65% probability of it hitting. Because if that's the case, if you do the math, like we'll just do basic math here. So say, for example, you took a trade that had a 68.42 probability of it hitting, right? You have full 100%, but if you subtract that by 68.42, this will give you probabilities that the trade will work for you 68% of the time, but it's probably going to fail on you 31% of the time. So which probabilities you're going to use, right? I'm going to use that one with a higher probability. So I would take the trade with a higher probability, and if I lose the trade, that's perfectly fine because I'm trading a 1 to 2. So if I lose a trade, then that's fine because if the next trade wins, I recoup the loss plus I make profit on top of it. So I use a 1 to 2 risk reward, and then I trade with probabilities in our favor. Today though is like, this is a day to kind of be careful. So here's the entry right here at 721, guys. It actually hit. So 721 right here. This is the one that we were talking about. Let me go back to the stats. So right here, it had a 52.63% probability of it hitting. Obviously, I was looking for a sell here, but if you're just going off the normal probabilities, it's still above 50%. So you still have some sort of edge. It's only like 2.63 edge, but the trade here is a long. So you can see here, if you took this entry, it would have went straight to your profit with like literally no drawdown. Yeah, so right there, 721. You're going against momentum. Probability is not very high, but you still have a 2.63 edge. Once two risk to reward, obviously you look for sells there, but this doesn't necessarily mean the buys never win, right? The buy wins very rarely. Well, not very rarely, but it doesn't win as much, but it's still won today. So 36.36 probability of it winning. And of course, like I said, you have the numbers in front of you. And if you still want to take that risk, even though the probability is low, it can still work out in your favor. So yeah, I decided not to take that one there. But let's see. Barack said, "Good day, guys. I see you caught two sharks already. Congratulations." Yeah, market's been super choppy for the day. Barack. Yeah, market's been super choppy. Talanji's asking, so your Discord re report stats in the day are incorrect. Yeah, I think some of them are the direction is incorrect, Talanji. Unfortunately, I'm just noticing it now, but yeah, I think I put some of the wrong directions here with like, and I'll put a note here too. Yeah, so I think what happened here, Talanji, is because when I'm putting this list together, I'm like copying. So I don't want to like retype everything here. So what happens is I copied it. Like I would just, double click on this list and then I would copy it and I would change the time, but I would forget to change the direction. Like I would change everything, but I forget to change the direction here. And that's what kind of like screwed up my statistics here. Yeah, so unfortunately, I mean that's my bad. Sorry, guys. Like I said, last night I've been like super like basically yesterday I've been trying to get all of the client agreements and power of attorneys out to the new hedge fund clients, and I was just my mind was somewhere else because it hit like midnight last night. And I was like, damn, I still have to get the the algo entries for the following day, and I just didn't have time to like. I just kind of grinded it out. So the entries here are fine. It's just the direction might be a little off. So it's important that if you guys are looking at my directions here on the algo, don't just take my stats here for like directly, right? Just check the time, put it in your own report here, put the stats, and then make sure that the direction is right. Because yeah, I kind of screwed up yesterday with some there weren't that many. There were maybe like a couple here that were off, but not all of them. Yeah, Solange said so we got lucky with the 7-Eleven. Yeah, well, I mean, the thing with your the thing with the entry is that it can really play out either way, right, Solange? So, I mean, even if my direction here is wrong, you still have probabilities of winning the other way. So, yeah, I mean, you technically did get lucky on it, but here, let's see, the 7-Eleven entry was. Now I'm kind of curious. I want to go back and take a look at it. Oh yeah, because you took it with momentum, right? Yeah, because right here I had it marked up with momentum. Let's see. Yeah, I'm curious to see what the probabilities were with momentum now that because you took it. I'm gonna update this real quick. Yeah. The probabilities here are actually really low to laundry for with momentum. I mean, it still hit, but which I'm glad it hit for you. But yeah, the probabilities there were like a little low. But here's the thing, you use the confluence, right? Because you use the confluence of MPS V2. This lined up with the MPS V2, so that's another confluence there. So it doesn't mean that it can never hit for a buy, but the probabilities were very low. You had basically a 16% probability of it winning. And then looking over here at the trade analysis, you had basically a 15 point or 16% probability of it winning for a long. So you lucked out because it only won 2 out of the 13 buys here. And you just got lucky, right? You just took that unicorn trade where you won one of the trades that typically doesn't win for for um for that specific. So like I said, basing it off the numbers here, there's always going to be probability that your trade will win. But if the probabilities are probably not going to be on your side in a long-term perspective. You can see over here, it goes through massive drawdown, but it does have winning days, right? And then massive drawdown, winning day. And then of course Talonji today got lucky with that entry, which I'm glad. All right, the next entry is at 7:51. Let me go and just update this real quick. I'm going to keep looking at the statistics here to make sure if this is one that I'm looking to take. Okay, it's going to be updating my report right now. It is updating the report, and we will see what this ends up taking us. Okay, so the entry over here at 7:51, it has a probability of 63.16. The main thing that I'm going to be looking for here is for the volatility here to kind of slow down a little bit. It looks like it is starting to slow down a bit, which is good. So it has a probability of 63.16 for a trade with the direction of momentum. Looking over here at the probabilities with regard to the direction, buys here have a 50% probability of winning. So it won 5 out of the 10 entries for buys. And then looking over here at the sells, it has a 77.78 probability of it winning. It won 7 out of the 9 trades. Like I said, you can never be 100% with the trades that you take, but you want it to, well, for me personally, I want to take trades that go with probability, right? So what I'm looking for here is at 7:51, I'm going to be looking for a sell momentum to come up, which is currently pending right there. And I'm going to be looking for this to continue down lower, right, in a downwards trend. So that's what I'll be looking for at 7:32 right now. So we got some time until 7:51. If you guys have any questions, feel free to hop into the chat and then I will answer whatever questions you guys have here. So let me scroll up real quick, make sure I didn't miss anything. Let's see, question from KM. KM is asking, hey, Sean, I'm not sure if you answered me above, but when you have a moment, can you explain your trading style? It looks like you're a quant based where you have coded a strategy and just take those trades. Yes, you are 100% correct. So, um, our strategy is a momentum based strategy. Um, and we take trades based off probabilities that are provided from the historical data. So, yes, you are 100% correct. We are quant traders here with regard to this specific strategy, but it's based off momentum. So what my algorithm here does is it tracks momentum swings in the market. So basically, I mean, there's different ways of doing it. For me specifically, I usually trade between 6 and 8 o'clock. So I only look for the data between these 2 hours. That's like my edge in the market. But if you wanted to trade throughout the day, you can see over here my algorithm, depending on what time you want to trade, you can set the times to wherever you like, right? So for example, if you wanted to trade super later into the session, like you start at 6 and then you want to trade until like 12, you could do that. You can change this to like 14, or if you want to have it closer to 11, you can do like 13. And then you just change that right there. You update the report. And then also right here, I set my targets, whether I wanted a 40 point TP, 20 point stop loss or higher, I would set that there. But you can see over here, my report is now currently updating. And what's going to happen here is it's going to provide me the top 10 entries between that time period. So I look for the trade with the highest probability. And then I only take the trades that have a specific criteria. Typically, for it to be on top of my list here, it needs to be above a 60% probability overall. Um, Ideally, I want it to be above a 65. So you can see over here, the stats they're okay. They're not super, super great, but they're okay. It shows that like at 633. This had a 60% probability. It could be on my list, but it's not going to be one of those trades that I typically like to take. So like if I wanted to kind of make adjustments here, specifically with this type of market, I would maybe adjust my target a little bit, right? So right now it's like a 60% probability. Let me change this to maybe 50-25. Right. Because like I said, we're doing this based off the quantitative data. I don't use price action. I don't use technical analysis. I mean, I know technical analysis. I've been trading for like over 12 years now, so I know how to do technical analysis. But what I started to realize over the previous, more recently, is that technical analysis isn't really there to help you in a sense. Technical analysis is really there to confuse you because it kind of screws you with your thinking process. If you don't have a bias, like say for example, if you're looking for a sell here, right? Because it looks like we're currently going to be in a downwards trend. Price is shifting to a downwards trend, right? If you're looking for a sell here, but you see prices at support, this is going to skew you from taking a sell, right? Since I'm trading based off momentum, if my data shows me that the sells here are going to continue dropping, then I'll take the sell, right? I don't care if there's support here because the data shows me that it's going to keep dropping. That's why, like for me, and I posted an interview because what I've been looking for lately is I'm looking at interviews with other quant traders. I'm like curious to see what do they see in the market? Like how do they distinguish, technical traders with discretionary trading and technical trading and algo trading and basing things off quantitative data. And what I've realized from a lot of quants is that a lot of this stuff is this is for the retail trader, of course, right? And there's nothing wrong with trading technical analysis or price action. It's just a style of trading. But for me, I have a hedge fund now. So like for me, I'm trying to understand how do these hedge funds trade. And from watching a lot of interviews and talking to other hedge fund managers, none of these hedge funds really use technical analysis. They all base all their entries off quant data, right? And that's why for me, I'm moving towards, I still have a background in technical analysis, but I'm moving towards quant data because that's typically what hedge funds use. Um, because everything's based off the numbers, right? You can't, like, for example, if you're trading technical analysis or price action, a lot of this stuff is discretionary, right? Like, for some people, they might see this as a support and they're like, okay, I'm going to catch a bounce here. Or some people are like, oh, I see this as a downwards trend, so I'm only going to take sells here. That's all discretionary. And unless you have the data behind you showing you that, okay, the quant data does line up with your technical analysis, then okay, great, take that trade. But what happens with a lot of retail traders is that you get faked out, right? Like you might be looking for a sell here, but you're like, oh, it's at support, so I'm not going to take the trade. But then the trade can go directly down, even though you don't realize it. If the data shows that price goes down, then obviously I would jump in on that sell. Vice versa, if my quant data over here shows me that there's a reversal here, right? So for example, at 751, I'm looking for a sell with momentum. So if I have a momentum push to the downside here, I'm expecting momentum to continue pushing down when it comes to 751 here. Um, the problem with this here is if you don't have the data behind to back up your analysis for the technicals, you can easily just, like skip the entry or take the entry and then, the trade might not play in your favor. Um, so I mean, there's different ways of analyzing this, but like I said, there's nothing wrong with technical analysis or price action. It's just for me, I feel like it's a lot of noise, especially if you're trading on like the 1 minute, right? Because we trade on the 1 minute here. The thing is, I'm looking for historical data and science basically to back up my entries here. That's why I have all the numbers here lined up, and I only take trades that have a high probability of it hitting. So that if it wins, great, but if it loses, that's perfectly fine because I knew that the probabilities were on my side, and it's just one of those trades that doesn't work out for me specifically. So that's just a quick rundown of like how we trade here. We trade off the quantitative data, um, but we do use technicals in a sense to identify, when to sit out of the market because the data is not always going to be correct, right? I mean, the data is going to be correct, but the thing is, like for example, today and yesterday, we're in this choppy market. This isn't what we call and consider an irregular market. Because for the previous month or for the previous days, everything here was like, even though it was choppy, it was still moving smoothly. Yesterday was super, super choppy. Everybody could see that. And then again today, the market here again is like very choppy. And you can see it over here on my main chart. It's pretty clear. Let me go and mark up there's another resistance level right here. So yeah, traditionally I was a technical analysis price action trader. I was also still using momentum. But now I've kind of transitioned my momentum strategy from technical analysis to just based off the data here, off of like where the probabilities are. So looking at this again, guys, we're stuck in this chop right now down the middle. So when we get closer to 751, I'll be looking for that possible sell. But if it doesn't come up, then we might just have to wrap up this week with what we have so far. This week isn't ha hasn't been that bad though. If you look at the stats for the week, it was actually a pretty good week. I mean, you might have if you took 3 trades yesterday, you would have ended up at break even, basically a break even week for you. But if you only took two and you didn't take anything today, you'd basically be at a slight profit. It's basically a 1 hour week. It's either a 1 hour or a 0 hour week, not like our previous weeks. And you guys got to remember, like, the market's going to be like this. There's going to be some weeks where they're like amazing. There's going to be some weeks, well, the week one was amazing right here. It was all straight wins from the 29th up until the 3rd. So it was all green for that specific week right there. And then for this week, it was pretty much for the most part all green. And then for this week specifically, 13th to the 17th, it was good until Thursday. And then we went to some chop here on Thursday and then chop over here on Friday. So we'll see. I mean, I'm going to be looking for opportunities here for entry. If they come up, then we'll kind of see where it goes. Let's see. So KM is asking. Let's see. Sam said back test, forward test, whatever you were trading. If it works, it's trading. Respect other people and learn from them. Yeah, 100%, Sam. I've talked about this before. Like, there's no one way to trade. You guys can trade technical analysis. You can trade quant data. You can trade momentum. You can trade whatever you want to trade, right? You can trade support resistance. You can trade supply and demand. You can trade whatever. But like what Sam said, back test it, forward test it. If it works and it's profitable, then apply it, right? Figure out what works best for you specifically. For me specifically, I've traded every type of strategy out there, right? I've been trading for over 12 years now. I've always been a momentum trader though. So from the beginning, I've always traded off momentum. I created this tool 12 years ago. Basically 12 years ago, I created this momentum tool. And all I've been doing is I've been building off this specific tool here. So, over the years, I built a trend indicator, I built high-low indicators, I've built session high lows, I've built trend meters down below. I built all these tools, but it always falls back on momentum. The momentum is always going to be the catalyst, and I just use other filters here to help me identify, higher probability. The thing is, now I've had a breakthrough this year where I now use the actual data, and I don't even need the other tools anymore because all my entries have always been based off momentum. But now that I have the quant data that I've been using, I don't really need the extra tools, right? Everything else was an extra filter. So like for example, I was using momentum, but I was using the trend. I started to realize that the trend doesn't really matter on the lower time frames. On the higher time frames, yeah, the trend does matter, but on the lower time frames, the trend is it can go anywhere really. Like price can be going up and it can pull back for a little bit and then it can continue back up, or I can do a full on reversal. So, it all comes with experience and you kind of build off your knowledge and your data and you improve over the years. Let's see, KM said, thanks for the explanation. How long did it take you to come up with the strategy? How long have you been trading it? So yeah, again, back to what I just mentioned. Um, I've been trading momentum for over 12 years now, but this specific strategy, the breakout, we've been applying it since 2020. So it's been about 5 years. Or more than 5 years actually. Before we used to always just apply it on open. So it was the breakout strategy. This is the one that we took or we identified earlier this morning. So before I used to apply the strategy only at 6:30, right? When market opened up. What I came up with the idea that, okay, if we take this at 6:30, I'm wondering if this strategy will work all throughout the day, right? So that's how I created my algo over here. And basically what I did here is instead of taking the trade at 6:30, we now take it all day. Or you can take it 24 hours a day, basically, or 1,444 minutes because the algo tracks the data every single minute. So basically what it does here, so and I'll show you like this is kind of the logic behind the algo here. What it does here is it will like say for example, see my algo here, I have it set to 40/20. What it does is it basically tracks it every single minute. So what my algo does in the background is right here we have a buy momentum signal, right? So what it does is it just tracks it. It's like, okay, at 7:42, this trade lost. At 7:43, this trade lost. At 7:44, this trade lost, right? And then what it does is it pulls the data here and it puts all the losses in order. And then that's if you're trading with momentum, right? If you go against momentum like this right here, now what happens is it does the opposite. So it tracks data both ways. It tracks data for it moving to the upside, and then it tracks data for it moving to the downside. So basically, every single minute, my algo is just running in the background. It's like, okay, this trade here lost, this trade here won, this trade here won, this trade here won. And if it keeps winning, it's going to give me the data over here to show me, okay, it wins this many times for sells and it wins this many times for buys. So then what I do is my algo will pull up the entries with the highest probability, and then I'll see, okay, this trade wins 60% of the time at 633, right? So then I pull up the data here and I'm like, okay, if I want to take that trade in the future, like what I'll do here is I'll just go to 633 to show you what it looks like. And then it's against momentum. I'll go and update the report. And if I like the entry, if the numbers look right, so now it's updating, right? It's going to update right here. So if these numbers here look right and they meet my criteria, and my criteria is going to be, I have a video on this if you want to see the video. It's going to be explaining it more in detail. Here, I'll put the video over here so that you can kind of, if you want to look back at it, Cam, I know you're new here, so it's good to have a good understanding of like what we're actually doing here. Or I'll post a link, Cam, if you want to take a look. There's a video there. Um, but anyways, this is the criteria that I'm looking for the most part. Where is it at? Okay, my algo checklist. So I check a period of time for entries. I choose my risk reward, which will be like 40/20, depending on what the market's moving at the specific time. Then I identify all entries with a 60% probability. So you can see over here, a lot of these entries here have to be above 60%. Then after that, I dig deeper and I look at trades with above a 65%. And those tend to be my target entries. And then from there, I look at the historical data to see if it wins typically on a Friday, because today's Friday, and then identify the risks of trading your news or open. There's no news today, so it doesn't really meet the criteria at all. And then I identify the probabilities for buys versus sells. So over here it says, it wins more for buys, so I aim for buys. So what I'm doing is I'm getting a sample of like what has a high probability, and then I'm digging deeper to identify what has an even better probability. And then when I have those specific times and entries in place, I have those marked up as my entry. So basically, I identify all these entries from the previous day. So last night I went through pretty much every entry between 6 and 8 o'clock, and I picked out what I wanted. I picked out the direction. And then from there, today, I don't really do any work, right? I do all my work the night before. So the morning after, when the trading day starts, I already know what to look for, right? So I'm pretty much ignoring this whole area here. And I'm waiting for my next entry, which is at 7:51, because I already did my research and I did my testing, and it shows me that this trade right here is probably going to work out in my favor if it comes up. Has a 65% probability of it hitting overall, 77.78 probability of it winning for a sell. And that's why for me here, I'm just waiting for this trade to come up. If it doesn't come up for a sell, probably not going to take it because it doesn't meet my criteria. I already made my decision last night that this is what I'm going to take, and this is the direction that I want to take it as. So, all right, guys, I'm gonna step away for 1 second. I'm just gonna grab some water. I had a little bit too much coffee, and I'll step by. Okay. All right, guys, I'm back. Um, Yeah, Toke said this chop today is insane. I closed the charts. I don't blame you. It is yeah, I don't blame you. It is extremely choppy for the most part. Um so I'm still kind of like I'm not convinced to take the entry right here at 751 yet. I mean, I want to take it, trust me, I really want to take it here, but it's just looking at the numbers right now and whatnot, it doesn't look super, guys, I think I have the data here, or it's with actually, not against. I'll follow it and I'm going to see the ATR is still a little too high for me, guys. So let me just mark it up real quick to show you guys what I mean by that. Yeah, the ATR is just a little too high right now, so I might have to sit out of this one. I don't know if anybody else here is looking to take it, but we'll kind of see what happens here. Barack says Kodi Kai nowadays sounds like the Continental for me. Certainty, yeah, it's all experience. Like Barack said, personally, experience is majorly chart time, 100%. Brock's waiting for the 751 algo entry. He's bearish, so he'd love to carry it downhill. So guys, look at this candle right here, right? This is what I just warned you guys about. These are outlier candles because they just kind of pop up out of nowhere. Like you could have these small candles and all of a sudden you get like a 50-point candle right here. The problem with me taking these types of entries is that my stop loss is at 20. So unfortunately, I think I'm going to sit out of this trade. If you guys want to take it, it's going to be a buy entry. Like I said, it's a very tricky market to trade with a small stop loss. You have to have a pretty wide stop loss. And for me, I'm not willing to adjust my stop loss just because today's choppy. Um, Overall, I think it'd be best to kind of just sit out of this market. But if you guys do want to take it, the trade is currently running. So I'll just mark it up for you guys here for those of you who are taking it. So the trade's currently running in profit right now. I would be kind of sketched out on this position because it's so choppy that, like I said, it can easily chop you out and then go straight up. Or I mean, I could be wrong and this can go straight up with no chop. Ideally, that's what you would want, right? Ideally, you'd want it to go straight up with no chop, but because it's such a choppy day, this here is it is it's just very unpredictable. And this is what's been happening yesterday. And good thing we skipped the trade, right? Because look what happened here. This is literally what happened to us yesterday. It would chop us out, and then it would go straight up to our profit because the stop loss is too tight. And I wouldn't be surprised here if this thing goes all the way back up. So I think we made the better decision here to stay out of the market. Um, we pretty much stay out of this right here for the most part because stuff like this happens. So let me check the chat. If you guys have any more questions, unfortunately, I think this is how we're going to close out the week. I mean, I'm still in profit, so I can't really complain, right? I can't be crying over making profit for the week, but I was really hoping to take one more trade today to recoup our loss from yesterday, but it's okay. It's not one of those days where we should be taking that type of risk with the ATR being so low. Look at where price is going. It's doing exactly what I just said was going to happen, right? It's coming it literally just tapped stop loss and it's going all the way back up. I'm curious now, so I'm gonna let's move it to 752. I'm curious, like if we moved it over by just 1 minute, if the probabilities here got any better. Because if we just didn't get in on this one, you got in on the next candle. So it's updating right now. I'm trying to see what the probability is looking like for the 752, not 751. No, I mean the probability is decent, but it's not good. It's still at 52. So you'd have basically a 2.63 edge. I typically want at least like a 20-point edge or a 30-point edge. Yeah. So yeah, technically if you were to take it from down here, if you were to take it down here, you'd be almost at your target, and then it looks like it's coming right back down. So, this is a chop that we're kind of dealing with these past 2 days. Let's see, question from KM. So KM is asking, is there a reason why you trade YM and not ES or NQ. Well, I've been trading YM every day for like 8 years now. So, one thing that I realized and what I've noticed and what I've learned from trading one asset is it's better to be really good at one asset than to be mediocre at all of them, right? If I started out with NQ like years ago, or if I started out with ES years ago, then I probably would still be sticking to ES or NQ today. But the thing is, I've been trading YM basically every day live. So if you go to the YouTube channel, let's see, I'll pull up the YouTube channel right here real quick. So if you pull up the YouTube channel, you can see here I have over 2,100 live trading session videos, right? So if you go to live here, you'll see that I've been trading YM for 8 years. So the thing is, I just got really good at trading YM. That's why I stick to YM. Like I know how it moves at certain times of the year. I know how it move. I know what the ATR is normally and stuff like that. So I've become like more of a master at YM. This goes back to like before when I was trading US 30, right? So like back in the day before I was trading futures, I was trading indices and I was trading US 30. Um, so I just gravitated towards YM. This strategy works on all assets. So if you wanted to use the algo, it works on ES and NQ. There's people in the group who do trade ES and NQ or they trade gold. There's a lot of different assets that you can apply it on. But for me personally, I've always traded YM and I became really good at trading YM and that's why I stick to YM. But we tried gold like earlier in the month we traded gold and it works well. It works perfectly well. It's just I don't trade gold normally, so I don't know what the TP stop loss is. So for the most part, I just it was hard for me to transition to gold, so I'm just sticking to YM. But yeah, what I would tell not just you, but tell everybody here, find one specific asset and just be a master of that asset, right? Whether it be YM, NQ, ES, gold, oil, soybean, whatever it may be, and just really drill down on that specific asset so that you can understand how the asset moves, understand the market conditions that it goes through, the market cycles that it goes through, how it moves during certain parts of the year. And you'll be really good at that asset, if you can understand those things. The thing with a lot of people is like they try to trade everything, right? They trade all these different assets and they just suck at everything. Like they may get lucky every so often on one asset, but they don't truly understand how that specific asset moves and they get caught in a lot of bad entries. So yeah, no, definitely Cam. I've been trading for a long time. So like what I've learned over the years is like stick to one thing. Like if you want to trade Forex, then stick to Forex and trade like whatever currency pair that you like, whether it be Euro USD, GBP USD, GBP JPY, anything specific, just stick to that one asset. Before when I used to trade currencies, I traded like 40 pairs. Like it was crazy. I traded 40 pairs and I did okay. I did good on most of them. And then what I realized is like these exotic pairs kind of suck. So I went from 40 pair watch list. I mean, you can see my watch list over here. I think it's still on here. Yeah, look at my Forex watch list. I used to trade all these assets, like 40 pairs here. Odd CAD, odd CHF, all of these right here. And gold and whatnot. And I was okay at majority of them, but once I drilled down, like I went from my full Forex watch list to only major pairs. And then I got a lot better at just these major pairs. And then from there I drilled down to only YM. And then from there, that's where I really started to excel once I got good at one specific asset. Yeah, David said one of the many things I learned from Sean is the discipline to sit and stay away from this type of craziness. Yeah, it's key, it's key having the discipline to to stay away and to understand when to sit out of the markets. This is one of those days, right? Market's choppy for today, so because we trade based off momentum, it's not a good day to take these types of trades. Let's see. Sam said, I agree. He is very inspiring. I can't imagine trading live, talking, managing, directing, analyzing everything, emotions, and staying profitable. I know it's tough, but I've gotten used to it and gotten better over time. Yeah, Sam said, honestly, if you don't have strategy and want to be profitable, just join Sean. Yeah, exactly. Just kind of do what I'm doing. Because I'm using all my factors to weigh in my favor. Let me scroll down a little bit, see if I'm missing anything here. Let's see. So David said, how does 25.50 look for it? I mean, it looks like it would have lost either way, David. I mean, we'd still put it in, but it looks like I would have lost either way. It's just this, like I said, this type of market, because the data is so skewed right now because of the choppiness, it's not lining up with what like how the market was moving the previous couple days or previous month, basically. Um, the good thing with this is that, the market may stay like this for a couple days, but then eventually the algo is going to adapt with it. We'll have different times. Like maybe we won't have a 6 o'clock entry anymore because maybe it's not going to hit as often. Like if you look at the 6 o'clock entry, this thing's probably lower now because of the loss from today, right? It's probably going to be instead of a 68, it's more of a 65. And then if it keeps losing, it might be going down that drawdown period. But you can see over here from the quant data that there's periods of drawdown. So it's nothing new. It's nothing new, and you just have to understand that, like, sometimes these trades just don't work out how you wish for them to work out, but the data here still shows that it's still profitable. Barack says when it says aim for sells, if taking, I thought it is a sell. Yeah, so what Chris mentioned over here, basically, when I have my criteria here, guys, it doesn't mean that only sells would work, but I was looking for a sell here. So like because this entry here was for a buy, I decided not to take this entry at 751. If it was for a sell, though, I would have taken it, right? Because the probabilities over here indicated that a sell would have been better. So overall, it has a 63.16 probability of it winning, whether it be a sell or a buy. In order for me to have the highest probability, and I'll pull up the data over here real quick. Let's see if it improves. Yeah, so it's updating my report right now. So here's the thing. If this trade came up for a sell at 751, this trade actually would have been really good. It would have won, right? Actually, yeah, it would have been a perfect entry. I'm just looking at it now. The 40/20 would have been perfect. It's just the trade didn't come up for a sell. Yeah, so I'm looking back at our entry here at 751. So I identified it for a sell. Right here, it said, aim for a sell if taking. This trade here was for a buy. So unfortunately, it just didn't meet my criteria. But if it was for a sell, it looks like the trade here would have played through. So this goes back to like what I pulled with my data here. It says it was with momentum, but because we're in a choppy market, unfortunately, we didn't have a sell signal there that was valid, and we couldn't really take that for a sell, right? We ended up having to take it for a buy, but because it wasn't a sell, I decided to skip out on it. So yeah, I didn't even realize that. Did you notice that, guys? David, I was just looking at the buy because it was a buy entry, but it was actually, if we went against momentum. The numbers aren't good for against momentum, but I was looking for a sell here because the data here indicated that it won 77.78% of the sells. Now, let's see, I'm updating the report to go opposite. Let's see, suggestion from Barack. Barack said, may I suggest maybe before going with momentum, we can check how long price retraced after the momentum print. So you can do that, Barack. The only problem with doing that is that like again, you're using discretion at that point. So the thing is, we're trying to go off the quantitative data. If you go off discretion, it kind of it turns it into a completely different strategy, right? In a situation like that, then instead of going in at 751, you would go in at 752, right? You would just change the data. Um, so yes, no, you do have a good suggestion. The problem is that if you start to do that, then you're no longer going off the data. You're kind of going off discretion. Again, you're going back to like your emotions, right? Because that's your emotions taking control. You're not going off like what the data shows, but you're like, oh, this thing kind of pulls back a little bit. Maybe I should wait a little bit. If you do that and you're not consistent, then you're not going to have consistent profits long term because we're trying to base it directly off the quantitative data. Yeah, yeah, you go back to technical if that becomes the case. You go back to price action, discretionary trading. Well, there's nothing wrong with it, but it's hard to find consistency if you're a discretionary trader. It's I've noticed that too. So if you guys have seen my live sessions before, you'll see I have a lot of discretion in the past where like if you took every discretionary trade, you'd be crazy in profit. But because I was trying to systematically change, but create a systematic strategy, we ended up like missing a lot of good entries in a sense. But all right, guys, if you guys have any questions, feel free to hop into the chat. It's 8 o'clock right now. I think we're done for the day. But if you guys are interested in signing up for this algo and getting access to it, just a reminder that this is the last day for you guys to sign up for it. You guys just need to sign up for the indicators, and then you'll get access to the testing period here for the algo. So if you guys want access to this algo, if you're on the YouTube, just go down to the description and go to the website. The website is kodikaitrades.com. Click on Kodi Kai Trading Strategies right here. You'll get access to pretty much all of my tools that are listed here, and then you'll also get access to the algo. We're all kind of like working together to figure out what settings work best, what needs to be improved, what needs to be changed, etc. with the algo. So the testing period is going to be running for a while. I mentioned before that there's going to be changes to the algo with regard to access. If you guys have access right now, you're probably going to get grandfathered in, guys. So don't worry about that. Don't worry about losing access to the algo. The people in the future, though, we want to limit the access to this algo to the public. So in the future, the price might jump substantially high because we don't want people to just be using it, right? So if you guys have access to it now, you don't have to worry. You guys are pretty much going to get grandfathered in as long as you don't, lose access to the tools. But people who are new, that's the main thing that we're kind of looking to limit because I don't care about sharing my algo with like 30 people here, right? Look at the live session. There's like 30 or 40 people here. I'm cool with sharing with you guys. This is it's a good group. It's a good group. We could all make money off this algo. The thing is, I don't want like hundreds of people using my algo because then it's going to lower the probability of the edge because you can't have everybody doing the same thing. It's just not going to work. So, all right, guys, if you guys have any questions, feel free to hit me up on Discord. Otherwise, I'm gonna wrap this up for the week. So here are my stats for the week, guys. Let's just go over everything so far. I took no trades today. So for this week, I am up 14,780. For this month so far, I'm up 317,770. And then for this year so far, I'm currently up. These are my stats from January 2nd up until today. I'm currently at 933,425 gross, 809,989 net. These are my stats for this whole year. And basically every trade here has been taken live. So if you guys ever want to go back and look at my previous trades for this year, just go to the YouTube channel, go to live, and you can see everything here is listed. I trade live every single day. So every trade here has been documented. And if you ever want to go back and wonder how I was doing like back in January, you can go back here and just, go back to the January streams and see what I was doing back then, which is pretty much the same thing. It's just I wasn't using quant data prior to October. So, all right, guys, I think that's it for the day. If you guys have any questions, feel free to hit me up on Discord. Otherwise, guys, enjoy your weekend, be safe, and I will be around because I'm going to be here sending out more agreements to the new hedge fund clients. So, all right, guys, I think that's it. If you guys have any questions, hit me up. Otherwise, have a great weekend.